Okay, market update 225. Finally had some kind of big action here. So we're going to go through a bunch. We're going to go through 10-year Treasury. We're going to go through overall market, just kind of a mix of all. But as for rates, as you saw, my previous video, like we broke some lines. We were just pending around, bouncing back up. And thankfully, we never made it up that high. We turned and broke this level right here. This was a big level. We've been at this one since December of last year. So that was a big turn. All this inflation talk, like we said, where inflation wasn't coming back. It was just all these pumped up reports and things to kind of shock the market. But reality is setting in that, we're not going towards inflationary. We're going towards more of a deflation type situation. So we're in a sideways trend. But with this break was significant. We've had both ways. And this is what we've seen with the regular market. Just a bunch of choppiness. If you watch the the 4-day video of the financial freedom, I talked about how this market makes a new high, turns around, scares everybody back out, does it again, turns around, scares everybody back out. Very choppy, misleading. This breakdown here, you think, okay, that's it, it's going to end. And this back and forth pattern is what we're seeing with everything. And you kind of look towards the leading indicator recently, which is Bitcoin. And Bitcoin finally also broke from that crazy level. Now, not saying we're not going to turn back up and snap around. That's what we've done every single time. So this market is just directionless. For rates, good news for people closing within relatively short time frame. Just lock somebody today who's closing next week. So we have some time. This is one of those opportunities you close within a week or two. You lock, you be safe, and you don't worry about it because this can very easily snap right off this line here and head back up towards the top. Now, more than likely, we're not going to break these highs every time we try and fail. It's more of a sign that the rates are going to continue downward, but they're not going to fall flat. They still have a lot of resistance here. So we're going to be in this sideways choppy trend with more weight towards a break. So good news there. Just kind of watching and waiting. So if you're thinking about buying, you really can't let the interest rates dictate what you're doing. As long as we're not breaking above these new highs, we're not going towards any sort of crazy inflationary type stuff. The tariffs, all that other nonsense that they were scaring you with, none of that's going to pan out. The chart says it all before the news does. So good locking day if you have it. If you're doing a refi, which I have a couple in there, it's a good day to kind of lock everything in and be safe. And we'll kind of watch and wait. But this level, the 440, is what we're going to be looking at for a while. All right, guys, have a good one.